Okay, so now we are down from 50 to 25, right? So, okay, so without further this thing, so my name is Vinish, and I'm the Chief Business Officer with Craft Silicon, and I have the pleasure to moderate this panel, or rather, try to, make it more insightful in terms of our discussion, right? So, before we start, and this is one of my favorite one, how many of you, like the story of Chai Wala? Who all loves Chai Wala? I'm not talking about the Chai Wala, I'm talking about any. Okay, so now imagine this, that till about 5-6 years back, a Chai Wala wanted a loan, right? With no bank account, all cash transaction. For a lot of us working in NBFC sector, it was a very difficult one to evaluate his credit score or to the capacity to pay back, right? But today, with India Stack, with UPI, with Jandhan, with alternate data, it is possible. Yes or no? Yes? So how it actually happened? So it all happened because of the digital innovation, right? How we as an NBFC sector, as a banking sector, evolved over a period of time. And NBFC over here plays a very, very critical role because where banks can't reach, NBFCs do, right? So without further ado, we will like to start, sir. Maybe you all can give a quick intro and then also tell us, along with your intro, what is some of the current trend that you have seen and how it has evolved over the last, couple of years?
Yeah, hi everyone. I'm Jayaraman. Very happy to be here. I'm the CTO for Aditya Birla Finance. About more than 25 years in the mostly in the banking side. So NBFC is a new avenue for me. It's been about a year, and worked mostly abroad. So it's been about a year in India with Aditya Birla Finance. As far as recent trends is concerned, I think what we've focused in the last few years. And I think we have kind of reached the maturity stages, have the right tools and platforms to service all channels, right? Be it self-service, assisted, as well as distribution-led. So that's one part. The second part is, have the right architecture in place to be able to engage with your ecosystem partners, some of which, Vinish, you mentioned, that helps us both in sales growth as well as in risk management. Right, that's the second piece. The third piece revolves around customer experience. How can you have your digital journeys which are seamless enough, right? But while also following the actual lending process, right? Not compromising on it, right? Have things like your account aggregator, digital KYC and all of that stuff added in, right? We want to delight the customer, but we can't compromise on the lending process. The last but not the least, a big trend and which we are still trying to catch up, long way to go, data engineering, right? So basically, how do we use data and analytics to power our lending decisions? So these are the major trends.
So, Iniya Malai Vanakkam. I'm Sendil Kumar from Shriram Capital. So, Shriram Group, most of at least Chennai guys will be knowing here. So, we are 51 years old organization. So, the Chai Wala, if would have reached Shriram, you would have easily got the loan. So, we are the organization who are predominantly catering the unserviced segment in the country. So, the asset under management is beyond 1.7 lakh crores, and we are one of the India's largest NBFC. And we are into life general insurance. And I am in this group for the past 26 years. That is the 50% of the Shriram's growth. I am also involved. And coming back on the technology, it is quite simple that we want make the life simple for the employees as well as for the customers. So in that scenario, we are trying to bring more automation in place. Second is that we wanted to ensure that the turnaround time for each and every process is getting reduced. So which are the areas which we need to focus? We are concentrating and making life simple. That's it.
Hello, I am Krishna Swami. I'm from Aptus Value Housing Finance India Limited. We do affordable housing finance and also SME finance. Actually, there is a huge untapped market in this country which can grow exponentially. And what helps this is digital financial footprint of each and every individual, and also the micro and macro enterprises basically. What India needs today is not a huge couple of billion-dollar companies. It needs thousands of companies which are into 5 crore, 10 crore with turnover. That's where the entrepreneurial growth will come, which will kick a lot of economic growth in the country actually. In this, the digital footprint, which the government has been very nicely working on the UPI mandates, and this brings in a lot of transparency, the ability to serve the customers faster. And apart from that, the data available, again, it comes into the technology space, which eases credit accessibility, makes it very easy to access credit, and at a very good price basically, and reducing and understanding the risks better in this affordable segment. That helps us in transparency. Thank you.
Good evening, everyone. Sorry, good evening, everyone. My name is Prasenjit, and I represent Vivriti Capital. So we are into B2B. Of course, you might have heard my co-panelists who are like, primarily in that chaiwala example. I think, predominantly they are directly going to that chaiwala and probably, offering him a loan. But we don't do that. We do it in a B2, B2C model. So we are one of the largest co-lending partner, in the country. And we do co-lending, and hence we reach out to the majority of the consumer segment. And we do all kind of, loans that you can think of. It could be a personal loan to a microfinance loan, or a gold loan to anything, in the MSME space. So that's how we basically we have grown past 7 years. We are of course Chennai-based company founded back in 2017. We are present in Mumbai, Bangalore, Chennai, Hyderabad, and Delhi. So that's our overall presence. We are not into a branch banking model or a typical NBFC branch model, but we are into this B2, B2C. Coming to the the technological, what are the things that we actually observe? Of course, we do work with multiple partners across the country, and what we have observed that last 2 years, the speed has become really essential. Of course, we are into the this lending space, and we primarily work. There are a lot of regulatory technologies that we currently work. While it's KYCs to let's say a bureau check, or let's say to we are moving towards disbursements and all that. But having said this, what we have observed that every partner that they expect from us is the speed. How soon we can actually disburse a loan to the customer. And for that, probably, in the course of our discussion, we'll discuss like what are the things that we probably do, and what are the technologies that we adopted. But the speed is something which has become really essential. And that is what is our observation. And we're constantly observing us like, how to increase the speed.
So just to build on to this regulatory, thing that you said. So Prasenjit and Ram, to you, in the recent time, we have seen a lot of, regulatory changes coming in, new guidance coming in, right? So do you see any impact on the innovations that you are trying to drive? I mean, very quick example or something that you want to highlight?
You want me to start? Yeah. So I think, regulatory changes definitely don't impact innovation, but we have to, have the checks and balances in place. Like we mentioned, right? We want to delight the customer, but, we can't compromise the lending process. So we need to make sure that certain things have to be followed. We can't compromise on that. And then there are a few other things like, use of data and analytics to identify the right customer to transact with. That's very important. And another thing that we are doing, from at least my company's standpoint, is that, we are trying to automate this data, what do you call, data audits, right? So basically, when especially when we have these RBI audits, and now we've been starting to get audited every year, we are being treated on par with the bank, right? So we get into trouble with, inconsistencies in data, right? And what are actually we have armies of operations guys who sit there, do data sampling. And what you've tried to do is do a data, automation of it. And it's not a sampling because we do 100%, of course, we're trying to get there. And what happens is every day, every week, or however you schedule it, it can run and it can throw out reports on these, like for instance, a name on the loan is not matching with your Aadhaar name, for instance, right? It's just an example, right? So those kind of things we are doing. So I think innovation is not impacted, but you have to, blend it with all these checks and balances. That's what we are trying to do.
Yeah, so I would definitely highlight certain areas that we improvised ourselves. Like, when we started back in 2017, we just created a platform. And today, any technology that you can think of, we are in-house development organization, I just mentioned. So any technology that you can think of, right from the LMS to LOS to the AML check to the KYC checks and the Aadhaar card that you mentioned, so there is a OCR engine which runs on the Aadhaar card, and it will actually give you that whether the name is correct or not. So there are a lot of AI/ML that we use, a lot of models that we use to ensure that the data is absolutely correct, and we are ensuring that the regulators, the needs are. I would not say needs. I would say the directions are, completely addressed. So because we are in a regulated business, and we have to accept that. We cannot just say that it's some other segment or other sectors are probably doing it in this way. Why can't we do it in this way, right? So we don't have a choice. We have to follow the regulatory guidelines, and then we have to do the business. And hence we have to build our systems, especially the back end, and wherever you are actually checking the data, your analytics, the KYCs, these things has to be in place. And it's a no compromise kind of a system that you have to build.
So, Krishna, from AI/ML perspective, when we are what Prasenjit has just said, any specific cases that you guys are working on, or overall from an NBFC sector, or is it still a big buzzword and hype, or is it really working on the ground?
No, actually, I don't think it's a buzzword anymore, because most of us do work on that. Actually, if you take, we are working on use cases, and we have been using it for 2-3 years. Basically, we do bounce prediction on multiple platforms, whether it is Python, whether it is TensorFlow, whether it is Power BI, different prediction models we use. We do machine learning on the data available. You see, any NBFC if you take, they sit on a huge data actually. They sit on huge data, and this data can be used to learn, and machine learning can be used effectively for credit evaluation. Okay, it works beautifully. You can arrive at a scorecard where you can give weightages basically, and then you can improve your credit score accordingly. And it can help save a lot of time basically doing a manual credit assessment. Because this machine learning, when you do on a credit assessment, when you work on it, it is completely unbiased. It is not, it doesn't have that human bias basically built into the system. So that helps in better assessment and better understanding. And the behavioral of the whole any NBFC for that matter, if you take, we sit on a huge amount of data where a lot of these things can be used. And these are not buzzwords anymore. These are reality, and we need to adapt it.
Perfect.
We need to adapt also.
Perfect. So one use case that he talked about is on the customer onboarding. How about the early warning as far as AI/ML is concerned?
See, so we have quite a few examples, right? So, basically our sales and risk models are basically our AI/ML algorithms, which, enable you to identify the right customer. And you spoke about predictive analytics, which we also do. So basically we try to figure out, the propensity to default, at an earlier stage, right? Based on historical data. And then we try to follow up with those customers, to ensure that they pay, right? That's another one. And then we have things like, email and chat bots. And we use, of course, we are not yet at the optimum level. We're still getting there. So we have our language models because we have multilingual, right? Our call centers. So we translate it. And then it can also do a Gen AI kind of an algorithm call, depending on what type of request it is, right? So those are some of the things I think that we have done, scratching the surface. But AI/ML, we, at least AI, we are completely adopting it. Gen AI, we probably long way to go, but we have started. Yeah.
Great.
So apart from this too, actually, see, we have done so many use cases. I just mentioned one. You can do foreclosure prediction. You can do a probability of default. We have done all these use cases. So this is a necessity now for organization.
Perfect. So Sendil, just coming on to this, we talked about customer onboarding, we talked about the, early predictive analytics for default. Any other specific area that you are seeing, whether it is AI, ML or any other innovation that you look into from a customer lifecycle management perspective?
Yes. So the organization is moving towards digital. So digital is now a mandatory, and also it is inevitable for any organization to go in. So the reason for things going digital is that to make the customer feel comfort and ensuring that the customer is with the same organization. There are a lot of companies which has come into the picture, and anyway, there are a lot of potential also. Still, as an organization, we want to ensure that technology brings the more customers in place. So we have developed an app which is called as Shriram 1. Shriram 1 is an app where this app, we are bringing entire Shriram together. Now around 45 lakh customers have onboarded it.
Wow.
It is hardly 6 months. 46 lakh customers are onboarded. The reason is that we are bringing, as I was telling, Shriram Group predominantly is there to cater the unserviced segment, which is on the bottom of the pyramid. If you think fixed deposit, in NBFC we are giving a good interest rate, and there are customers which are on the creamy layer. So there are one segment which are on that layer, and other segment we are in the bottom of the pyramid. So this two we are integrating and bringing this app in such a way that to customize in a person where he needs it. I could see that daily around 4 o'clock I will get a trigger from my mobile, like from Zomato or Swiggy, 4 o'clock. And it will be a personalized message. Sendil. No one will tell Sendil like that. Sendil, now it is 4 o'clock. Are you hungry? Do you want a masala dosa now? Order here. So this is the way they handle it. So this is what finance also we have to see. If a person is investing more on fixed deposit, immediately we have to tell him that, Kumar, are you interested in go for a mutual fund which has higher interest rate? So this is the where we financial, especially the technology heads have to focus on. And we as an organization, we are seeing the 360 degree of the customers. What is his potential? How we can use him? How we can make his life simple? With a single app, how can we handle it? So these are the areas where we are focusing.
Thank you so much. So that brings to, Krishna, to you. While we are trying to do all this, innovation, good work and all, any external or internal obstacle that you face in general, which stops or blocks you towards this innovation? It can be practices, it can be anything.
See, any change will face resistance, basically. It is...
any specific example you want to highlight?
Even regulatory changes, actually. Even for that matter, when regulatory changes, it's not so easy because the policy making happens at some level, and they write, it is at a very abstract level, it is written, and how it is inferred by the auditors who come on ground and how they interact with you and what they want you to do is completely different. We had very funny instances with NHB and RBI when they came, because they interpret outsourcing in a different way. We tell what's outsourcing. So there are a lot of things basically. So there will be discrepancies, but at the end of the day, we need to get along. There's no other way. So, but that could impede, or it can be an impediment for organizations to grow until unless the policies are understood across the board basically, or trainings happen, or the benefits passed on are maybe understood at a holistic level. Okay. That is one side of the spectrum. The other side of the spectrum is the floor of the team, your own team. Basically, when you digitize, when you want to bring in transparency, when you want to make it, it's not easy. You see, we are working with, as you said, as Shriram is working, and we are working with tier 3, tier 2, tier 4 towns basically. It is not easy. So a customer is not going to come to you directly. He will go to a connector. He wants to believe him. Okay, so there are a lot of challenges here when you digitize, when you want to bring in transparency, when you want to make people understand the benefits of being in the digital footprint, basically. So these are the challenges which every organization goes through, every organization overcomes. So we are, NBFCs, technically, if you speak, are qualified actually to do assessment on credit evaluation. Basically, we sit, talk to it. It is like a digital. It is digital, but a physical touch is needed where we talk to customers and engage them and understand them.
Perfect. You want to add, Prasenjit?
Yeah. Yeah. So again, probably when it comes to the adoption to the changes, basically what you just mentioned. So any organization would have faced that difficulty in terms of any change that has come from the regulators or any change or any way of doing business that you suddenly change, right? So that becomes a definitely a problem that we face. But I would say still, we were lucky because we are probably a next gen NBFC and we started with tech. So we never actually faced the problem what sir was mentioning, when it comes to let's say 200 or 300 odd branches and everywhere basically you have to accept and adopt the new thing. That becomes a great challenge because even before Vivriti I used to work with a bank. I know what is the challenge in the branch banking and all that. But in that sense, we are definitely lucky because we are a B2B with maybe around 400 employees across the country. But yeah, it's there's a change. Definitely we get into a war room and we actually do that change in the system. And that is how we basically follow that because we know we have to do this. That's how we actually execute. Yeah.
So thanks so much. Thank you, everybody. So one quick this thing. So NBFCs is no longer a standalone organization. It's an entire ecosystem which is working, right? You have got RegTech partners, which is giving you, ID verification, credit bureaus, your payment ID verifications, everything, right? You have got Paytechs, for the recollection. You have got banks to support the, the entire flow. So how do you see this evolving in the next couple of years?
Yeah. So from a partnership standpoint, we actually had, a bulk of our retail loans sourced from, ecosystem players like Paytm and all. So we are now migrating to a totally distribution model, right? So basically we are treating these partners more like a sales channel, right? So that's one piece. And the second piece that you mentioned about, tech partners like, your account aggregators, your, PAN verification for your video KYC and so on. The key is, I think it's a very important aspect of, the entire industry, and you have to incorporate those seamlessly into your journeys. There's no, I think the ecosystem is going to evolve, and the regulators are going to be even more stringent, right? So we can't do the kind of things that we used to do because the NBFCs were not used to compliance and regulatory pressures in the past, right? So now that's no longer the case. So we have to balance it all, right? But we need these partners, right? Because no point in reinventing the wheel because they bring a lot of good services. But question is, how do you take care of the InfoSec part? How do you integrate seamlessly, and how do you make sure the customer experience doesn't suffer, right? So that's I think it's an important aspect which will continue to evolve.
Thank you, Ram sir. Mr. Sendil, you want to add?
Yeah, see, again, I'm coming to Shriram on app, where we have tied up a lot of partners, especially BBPS, which we have done so that the customer can go and pay electricity bill. And similarly, we can connect it with the Red Bus, where they can go and book bus ticket. So everything now the partner plays a major role, and we can't do everything on our own. So here in this scenario, we have to ensure that the collaboration and has to be properly in the secured manner. Lot of APIs are getting connected and east-west traffic within our organization, internal applications and third-party applications which has to get connected. So here, as a CIO or a CTO, we need to ensure that security of this API which we need to take care. The business will give pressure on us to do that. We have to do that, but ensuring that security is
The security of the APIs.
especially on this partner apps.
It's interesting because, if you look at it from a bank perspective, most of the APIs and the platform is being operated from within the ESB, from the ESB layer. It's not going beyond, but that's not the case in case of NBFCs, right? So that's one big change that we see. Yeah, because of the cost and other factors as well, So how the APIs are encrypted, how, the get and post are happening. Absolutely. So I think that brings to the, I think we are good. And guys, can we have big round of applause for all of us Tell you why, because we were able to cut it down and improvised from 50 minutes to 24 minutes and 30 seconds. So, any questions?
Please.
Sorry?
That's not the best.
Thank you.
Thank you.
Any questions, please? Yeah. Can we have?
Question is for you, sir. Like you mentioned about the adoption of this 45 lakh customers, right? The app for you. So how did you manage that? Getting 45 lakh customers adoption is not an easy thing, right?
Yeah. See,
Especially when you're doing that kind of segment.
yes, yes. So more motivation for the see, there are two things. One is a B2B app is there. The field executives, what they feel is that if they go and do, they will get incentives, and they make in such a way that this app will trouble their incentives like that. So we have motivated the B2B, that is our field executives and others, to go and promote in such a way that they will get the same incentives at part. So what is that which they can do, how they can make it, is one side. And second is that with our employees, where we have told them that there are certain points in which we are given to them, like Paytm and Google, who give that this many coins like that. Here also you can also download and see how it is. Shriram one is that, where you get the points for each and every transactions which we are giving it. And predominantly we are concentrating on the tier C, D customers. And I could see that when I went to down south, trains and all, they have fully put Shriram one app, where here I couldn't see. The entire train was with Shriram, that advertisement are there. So team are doing good in all aspects. And our expectation is that in another 2-3 months, it should reach at least 60 lakh customers.
Yeah, got it. Thank you.
Thank you. Good. One last question? Yeah.
Your topic is innovations and challenges. Now you have fintech NBFCs. Now when the innovations of fintech NBFCs in this world are there, then the non-fintech NBFCs, they suffer and they are left behind. So I would like to ask you, what is your solution for this problem? Thank you.
Can I?
So you want to go?
Yeah. So fintech NBFCs are good. They are good actually, and they have to be there. And non-fintech NBFCs are not going to suffer, ma'am, because there is a huge need of physical and digital support to the end customers, to the kind of customers we do in tier 3, tier 4 and tier 2 towns basically. See, when we do, okay, we are doing an secured loan basically. So we need, there are a lot of touch points where we physically engage with customers, whether it is legal documentations or documents, so many areas. And that personal touch is still expected by Indian customer, and it is needed. I think technology here, even non-fintech companies, they use technology to deliver the credit at the fastest pace to the end customer. But physical touch and customer relationship is the key, and it will be there. Even for fintech companies, I have a very close friend of mine who has a own fintech company, and they do, and we talk regularly and we discuss actually, and they also now are looking to engage with customers physically to ensure that customer satisfaction and customer experience is better actually.
Yeah, I think that's it. So, guys, before we go, just one last closing remark from my side. So, while I was taking up this moderation, my marketing person said that, Vinish, you are taking it up as a moderator, you will not be able to talk about your company, right? So, just a quick one. We are Craft Silicon, and we provide the LMS LOS services, probably one of the largest in Asia in terms of the dollar value and in terms of the borrowers. So we have got 117 million borrowers on our platform. And so Vidhi, that's for you. Thank you so much. So thank you, everybody.